Then. And right on top, we've got a conversation coming up as the UBS Asian Investment Conference 2025 is underway. And Naveen Killa, who is the head of APAC Telecommunications, Media and Internet at UBS Investment Bank, is now joining in with his thoughts. Thank you very much, Naveen. Look forward to this conversation. You recently met with 30 investors in US and Canada. And you spoke to them about the India telecom internet space. You compared it with the rest of the Asian peers. What were the big key takeaways?
Absolutely. Still jet lagged, actually. So look, on the India internet space, which is where the conversations are a lot more, I think the discussion centered on two main things. First is the extremely high competitive intensity that we are seeing in the quick commerce space, particularly in the last 6 months with the entry of several new platforms. Investors are obviously a little worried about that. But at the same time, they're also mindful of the long-term substantial growth opportunity in the quick commerce space. And therefore, I think at the end of the day, I kind of sense that there is a positive bias, but maybe they're on the sidelines for a little bit. On telecoms, I would say there are probably three main things that people are discussing. First is tariffs, which have obviously gone up a lot in the last 4 or 5 years, but there is an anticipation that they can keep going up. But as the base gets higher, is it easier to keep increasing prices at the same pace? There's obviously increasingly a lot of questions around satellite broadband, given the recent deals that both Bharti and Jio have announced with SpaceX, and what could that mean in terms of technology evolution and roadmap? And then finally, with telcos in particular, there is always this conversation around cash flow generation, which the sector tends to generate a lot, and what that therefore means in terms of the utilization of that cash for future investments versus dividends.
Okay, so those were the questions, Naveen. Now it's your job to give us the answers to that. So let's talk about the internet space. Without getting into stocks, broadly, you're bullish on the two internet, quick commerce kind of stocks like Swiggy and Zomato. The UBS view is a buy call on these stocks. Now, as you pointed out, investors are concerned about the rising competitive intensity. The numbers show the losses are deepening in the quick commerce side of the business. What would your answer be to that? And why are you bullish on this space?
So I would make two observations. One is you do need to look at the size of the pie, which is expanding at the rate of 100% per year. And I think we are constantly redefining what is quick commerce. A year ago, we would have said quick commerce is basically concentrated in 30 cities, predominantly centered on groceries, and mainly focused on 15-minute deliveries. All three of those assumptions are changing today. Quick commerce is available in closer to 100 cities. Categories are expanding way beyond groceries, and platforms are going into 30-minute, 45-minute deliveries as well, which expands the market in a big way. So the first point I would make is that the total addressable market, or TAM, here is very substantial. And that is something that we obviously have at the back of our mind. Secondly, in terms of the cash burn and the losses that you talked about, so there are two drivers of that, right? First is the increase in marketing costs, which we are seeing some signs of stabilization. Again, there will be some quarterly fluctuations, but we think the worst of the competitive intensity is behind us. The second and the bigger driver of margin decline is the rate at which new dark stores are being built, because that brings a fixed cost in the system, and it takes a dark store 3-6 months before it gets the scale that it needs to become break-even. That pace has been extremely rapid in the last 6 months. But our view is, again, that is starting to peak just because of the size that they've reached. As I said, we are already in 100-odd cities. So as these two factors start to play out, again, it's tough to say which quarter it is, but we are probably very close to the bottoming out of that margin trajectory, and that explains our positive view on the space.
Naveen, good morning. Thank you for joining in. Firstly, before I get to more granular details of the telecom space, there has been this lingering threat/opportunity of satellite communication becoming a part of the Indian system, and the incumbent telecom players have expressed their views on what it should be. But do you see this as an opportunity, or do you see this as a threat for the incumbent telecom players in India?
So, the first caveat I must add is that this technology is evolving so rapidly that we honestly have no idea how things will evolve even 2 years out. But that being said, what cannot be denied is that the cost per GB for satellite will always be a multiple of what it would be using the traditional mobile broadband technologies. And in a price-sensitive market like India, I think that will always be a bottleneck to massive adoption. I think the fact that we have started seeing telcos doing deals with satellite operators rather than the satellite broadband operators coming separately in the market kind of proves that at the end of the day, the telcos start to see this as an additional service. So think of today a network that does not reach maybe 5 or 10% of the population. The satellite technology can help you get there, monetize that part of the business, and also help you manage the capex that you otherwise would spend to cover extremely remote areas in the country. Of course, in return for that, you might have to share some of your revenues with the likes of SpaceX, but in the context of the premiumization from better quality and just the fact that there are extra customers that you can cater to, I think the upsides can easily kind of offset the costs. So as of now, our view is that it's probably going to be incrementally positive. But if the technology evolves to a point where the cost per unit is comparable to mobile broadband, then I think obviously the conclusions will be very different.
But as of now, you don't see that possibility. But are investors baking in any upside for, say, a Jio, Bharti, any of the incumbents on account of satellite communication, or not yet?
I don't get the sense that they are. And I think the reason for that is, remember, at the end of the day, India is a reasonably well-covered market, right? So from a population perspective, you have more than 95% population coverage of 4G and 5G networks. So ultimately, what you're talking about is a very small subset of the customer base that could be incremental. I think the opportunity that could be bigger is if you are able to charge more to the customers by giving them the proposition that you now have 100% geographical coverage. And whether the customers will be willing to pay for that, because you do not always go into areas where there are blank spots. That opportunity could be a lot bigger. The incremental customer opportunity is marginal.
Got that. Well explained. Naveen, one final question. For an emerging market investor who has a choice to invest in India Telecom, India Internet stocks, and the comparables in Asia Pacific, what would the pecking order be? Where would India stand in that? How are the valuations versus growth stacked up?
So I would say, first of all, remember at a time of massive global macro uncertainties, we are definitely seeing investors who are looking for businesses which are immune to some of these external factors like currencies and interest rates and all of that. And positively speaking, both telcos and internet actually fit into that. Domestic businesses, largely local currency revenues and largely local currency cost bases, and much better balance sheets. So I would say the whole space kind of fits in well within that thematic of being unimpacted by the broader macro. That being said, I think in terms of your pecking order, I would say that, from a longer term upside perspective, we clearly have a preference for internet. Both the customer growth as well as the revenue opportunity there is very substantial. Telco is a relatively mature business, but obviously one that gives you solid cash flows. So our pecking order would be India Internet first, followed by India Telecoms.
All right, Naveen, thank you so much for sparing time and joining us today with your views on both the internet and the telecom space as well there from the UBS Asian Investment Conference 2025. By the way, the Nifty continues to remain 50 points lower, 170 down on the Sensex. So it still continues to remain in that very narrow range. Does the index in today's trade as well. Take a short break, but on the other side, all things commodities with Manisha Gupta.